Welcome to the Strategy of the Week for December 31st, 2009. My name is Angel Clark, Research Strategist for VectorVest. Well, this is it, the last day of 2009, and our economic situation? Still cloudy. Investors don't know what to believe or where to place their money, which is why we're talking about gold as our last Strategy of the Week for 2009. Gold is where the money goes during times of economic fear and uncertainty because the price of gold doesn't rely on the strength of currency, and that is one of the big reasons that you're hearing gold talked about everywhere. Just turn on practically any TV station. You'll see ads for gold coins, gold bullion, companies offering cash for unwanted gold jewelry. Gold is a way to safeguard wealth. But the other big reason that you're hearing about gold is because it has had an incredible run. It's gone from a low of about $255 an ounce back in 2001, and there's quite a bit of speculation that it's even on its way to $2,000 an ounce in the not too distant future. Sounds pretty tempting, doesn't it? But should you believe it? I did a little research, and by the time I got done reading what the experts had to say, I swear I was more confused than when I started. But the great thing is that figuring out which expert is right or wrong doesn't matter. Fact or fiction, it all comes down to the trend. Don't believe me? Research the tech boom. Research the housing boom. Uranium, petroleum, you name it, hundreds of percent made and lost. And it all boiled down to the same three questions that VectorVest has been answering for investors for over a decade. When do you buy? What do you buy? And when do you sell? And that's what the MIDAS TOUCH is all about. In this case, the what to buy is pretty much settled. We want to add gold as a part of our diversified portfolio. Let's start by taking a look at the chart. We'll switch into the program, and I'm going to use the HUI. They call it the Gold Bugs Index because BUGS is an acronym for Basket of Unhedged Gold Stocks. We'll put it in the Quick Lookup box and click on Graph. This is an index that tends to lead rather than lag the price of gold, and it's going to help us fine-tune our timing. We'll switch to All Daily and just look at price for now. You know, with a quick glance, it can seem like investing in gold is scarier than the reasons that sent you looking at it in the first place. I mean, how do you know when something like this is going to turn into something like this? So all we need to do is make sense out of these violent swings in price so that we can clearly identify where the big moves might be, like this one back here, or this one in through here, and again, just recently. That's a pretty big challenge, but I know VectorVest can handle it. Typically, knowing when to get in and out of gold has all been done with technical analysis, looking for chart patterns, identifying support and resistance, looking for retracements. Basically, a lot of work, and that's really not VectorVest style. What we're going to do is simplify this whole thing by focusing on the stop price. So let me put that back on the graph. And the stop price is the 13-week moving average of the closing price, and then it's adjusted for the fundamentals. We don't really have any fundamentals coming into play here because we're looking at an index rather than an individual stock. But that moving average foundation instantly gives us a less volatile pattern to work with. You can see the stop price isn't nearly as temperamental as the actual price of the security. Now we're going to fine-tune. Using the stop price as our base, we're going to go down to the moving averages. And instead of setting them up to follow price, we're going to set them up to follow the stop. Dr. Delito came up with this, and I've got to say, it's a pretty cool technique. You do need ProTrader to do this with the moving averages. So if you don't have it already, you can try it out absolutely free. And if you'd like to purchase it, we have a special discount available right now. Just use the link in the views. I need to change one more. So I'm going to click on Price, go to Stocks, the Price Volume category, and choose Stop. And then I'm going to select the period that I want to use. I'm going to keep this one at 10, and I'm going to change the second one to a 65. These are daily, simple moving averages. We'll click the check boxes to put them on our graph. Now we're going to clean it up. We'll remove everything but those moving averages. And just like that, we cut through all that noise. Now we can clearly see the trends and when they're taking place. Here's how this works. Let's start over here on the left. When our 10-day moving average, that's our little blue line here, crosses above our 65-day moving average, that's our signal to get into gold. When it crosses below, that's our signal to get out. Very simple, but it works. Of course, you would have seen you would have been in for this entire run here, this one right here. You would have been out, more importantly, for this entire run down, and back in this year for those huge gains. The downtrends that you avoid are just as important, if not more important, than the ones that you get in on. Unfortunately, when you get into a sideways market, you're still going to catch some whipsaws. But that's where RT can really help us out. Relative timing. That's our momentum indicator at VectorVest that tells us exactly what the trend is and what it's doing. And we're going to use a similar technique on RT to confirm when an uptrend for gold is starting and when it's ending. So we have one more moving average available down here. We'll change price and go to stocks, the capital appreciation category, and choose relative timing. We'll leave it right where it's at 40. We'll check it off. And let's see if I can scoot this up a little bit. We still have a few whipsaws in this area, but by adding that relative timing as our confirmation, we've cut them in half because we only get into gold when our blue line has crossed above and our relative timing moving average is above the red line. It doesn't matter what order they happen because you need both in order to have a timing signal. So where's our first signal? We'll zoom into the very beginning of our graph. Our first signal isn't here. That would have been a whipsaw. But because our signals didn't sync up, we avoided that. Instead, our first signal would have come here on July 12th. That's when our moving averages first crossed to the upside and our relative timing moving average was above that 1.0 line. Now let's find the first sell. Our exit out of gold looks like it would have been right there. Our two moving averages crossed to the downside earlier, but we waited for relative timing, and that moving average of relative timing didn't cross below until 6:30 when it was 0.99. I might be able to show that to you a little bit better if I scoot it up some more. There we go. And each time we want to get into or out of gold, we look for those same two things. Our moving average crossover on the stop price and relative timing. They both have to agree. I'll show you a way to take action on these signals in just a minute. But before I do, I want to change to a performance graph. We'll go up to standard, get rid of market, and now we're still looking at the price of Huey. I'm going to add to that the price of the VectorVest composite, what we use to track the market. Because some of you might wonder why we don't just use our traditional timing systems on gold. You hear us say every day that market timing is the most important thing to know. That's because we know that the majority of thousands of stocks go up when the market goes up, and the majority of those stocks go down when the market goes down. Gold isn't a majority, though. It's a single commodity. We're being much more specific in our trading, and we're trying to catch each major trend that gold has. And while a good part of the time gold does rise and fall with the market, there are occasions when it goes the opposite direction, as you can see here. The VectorVest composite is in blue, and the Huey is in black. If we go up to drawing, there's a huge divergence right here, where gold is on a tear, but the VectorVest composite is falling off. We see the opposite happening in the short term over these last few weeks where the market has been moving up and the Huey is falling considerably. If you're a gold investor, you have to be able to identify those periods. And now with VectorVest, you have a way to do just that. So let's see how we take those timing signals you just learned about and turn them into profits. We'll close our graph and go to the Portfolio Manager. We'll create a new portfolio. And due to time, I'm going to start with the last timing signal on our chart, which was actually January 7th of 09. And I'm only going to use 25,000. The reason for that is because we'll only be buying one security. We'll change this to next day's open and change our number of long positions to 1. One of the easiest ways to take advantage of rising gold is to buy the gold ETF. So that's what we're going to do. Managing our risk is always smart. So we'll check the box for stop criteria. and choose a trailing stop of 5%. Click OK, and then we'll buy from search. Go over to the ETF group, open it up, and you'll find the MIDAS TOUCH. Very simple little search. It only looks at the ETF GLD. GLD has the highest average volume of all the gold ETFs in VectorVest. It also has a lot less volatility than some of the other funds. The kicker to this search is on the second line, a 5-day price delta greater than 0. That means the price of the ETF that we're buying has to be up on a week-over-week basis. We really focused on the major, longer-term signals with our timing. Now we're paying more attention to what's going on right now with our search, only buying GLD when it's on its way up, not only in the long term, but in the short term as well. Because of that, I can tell you that if we try to buy stocks on that timing signal of January 7th, we're not going to find anything. GLD won't be rising on a week-over-week basis until January 20th. So I'm going to skip right to that day to get us started. The only other change we're going to make here is to invest all of our money in this one GLD stock. If $25,000 is all that you have, though, are you going to put it all into gold? Absolutely not. The reason why I'm investing all of my money in this GLD is because it represents only a fraction of my portfolio. So we'll buy our stock, or in this case ETF, and it goes into our portfolio on January 20th. Then we're going to update. Our timing signal came almost a year ago, but it's still up. If you look at that graph, those moving averages have not crossed to the downside. So we're going to try to continue and get all the way until current, but we hit our 5% trailing stop. We did that on February 27th. And even though our timing signal is still telling us that it's okay to be in gold, we're going to play it safe, sell gold, so that we keep as much of our profits as possible. We're up 10% right now. We don't want to lose that. So we go up to close position. We close all. And yes, we're sure. And we gained a little bit more by closing out at the next day's open. And we just start running our search again. So we go to buy from search. It's definitely not going to be rising on the day we sold it using our trailing stop. So if we go to the next day, which would have been the 2nd of March, still not rising. The 3rd, nope. Every time we find that it's still not rising, we just move to the next day. Run the search to see if it's rising yet, and if it still isn't, we just wait to try again the next day. 2 seconds is all it takes. And it wasn't too long before gold started moving up again. It was on the 11th. So we'll go ahead and click Buy Stocks. This time, of course, GLD is found because it's up on a week-over-week basis. And from here on out, I think I'll be lazy and just use that auto tester to keep checking for when it's rising and when it's not. You can see each of these little flat periods are when we would have gotten out of GLD because it hit our stop criteria, and then we got back in. At the end of that year, you're looking at a gain of 35%. There's the equity curve, and if we check the report, you only had 5 trades during that time period. So the combination of that timing with that ETF and that tight money management really paid off for you. Out of those 5 trades, 3 of them were profitable, and your losers barely cost you any pain at all, because the biggest drop in your portfolio value was less than 10% during the entire year. Not bad, but that's only one signal. I also wanted to show you what the entire history of those timing signals did from 2005 till now. So let's go over to this gold group, and first I'll show you the Huey index with no timing at all. Pretty ugly. If we go to the report, we've got a nice gain, 100%, but we have a 70% drawdown. If we had used GLD, definitely less volatile. But if we check the report, without timing, the drawdown was still almost 30%. We had a better gain, 152%, but that drop in our portfolio value was just a killer. So let's close out of this one and go to our MIDAS Touch. Same money management, that 5% trailing stop, along with our timing. We've got this beautiful equity curve. We've still got 152% gain. And if we check the report for that drawdown, we've cut it in half. Now keep in mind, this also includes the bear market where gold eventually got killed. You still only had a 15% drawdown from 2005 all the way to current. I'd say that's a technique worth learning. You can also use this timing technique with gold mining stocks, though. Maybe you don't care for ETFs. If you're craving a lot more excitement, when your gold timing signal says that it's time to make a move in gold, just open up the industry viewer. We can sort it alphabetically and then scroll down to the M's where you'll find mining, gold, and silver. If you just double click there, you've now got over 90 mining stocks ranked from best to worst using that VST indicator, value, safety, and timing. And now with that timing system, you know exactly when the time is right to buy them. Do a little cherry picking from the top 20. Let's go back to that last signal date of January 7th. See what was at the top of the list then. We've got Royal Gold, Eldorado Gold, and I bet you we've got some names that you don't even recognize. But they're all evaluated mathematically with no bias at all. Let's do a quick test. We'll quick test the top 20, and here's what you're working with. Out of the top 20 mining stocks, when you got your timing signal on January 7th, 19 out of 20 went up for a gain of 96% during that time. Let's compare it to the Huey. You saw what an impressive run it had. Well, the Huey during that time only went up 58%. Nice, but not as nice as the top VST stocks. Hey, any way you want to do it, VectorVest makes it easy to give your portfolio that MIDAS touch. That's going to do it for this year, guys. I'd like to thank you for joining me, and I hope you all have a very profitable new year.